Hey, how are you? Lou Mosca, Chief Operating Officer of American Management Services. Welcome to today's edition of Straight Talk, coming right to you from chilly Orlando, Florida. Okay, so, unless you haven't been breathing, you've been reading about Silicon Valley Bank, SVB, whatever it's called, the techie bank from out in the West Coast somewhere. And, I know most people are aware of what went down or what appears to be happening. The bank was founded back in the 80s, and I read recently that the bank had about $200 billion in assets. And it sounds like this gargantuan amount of money, but when you compare it to the JP Morgans and Bank of Americas of the world, where they have like $3 or $4 trillion in assets, really is not the biggest bank in the universe. So what caused SVB to fail? The Fed raising interest rates, people wanting to pull their money out of the bank. You can make a lot of reasons for why theoretically it happened, but the real reason it happened is because they took too many risks. They did not manage their balance sheet properly. Let me repeat that. Too much risk taking, did not manage their balance sheet properly. So, thank you, Mr. Federal Government, again, for saying or stating that all depositors will be secured and will be made whole. I don't know if that's the right thing or the wrong thing. I'm not going to take a left side, right side, middle side, blue side, red side. Who cares, right? But to me, if everyone's been made whole, so the bank failed. What's next? Well, what's really next is that ripple effect, which you got to be careful of. So if you do a rewind and go all the way back to like 2010, 11, when we had the mortgage crisis and the banks were just lending mortgages or giving out mortgage money to a frog that came and applied for a mortgage. All right, then, the federal government went and put all these requirements in place, all these stress tests in place for banks. And they had to comply with them. And I don't know if they had to report monthly, quarterly, annually, I just don't remember. So, and 10, 12 years goes by and people ease up. And people start cutting corners again. And banks and regulators, they ease up a little bit. So the bank didn't manage itself properly and took advantage of lax regulations. End of story. That's what it comes down to. So think about this. You're a consumer. What's the impact to you, Mr. or Mrs. Consumer? What do you think it is? It's the same thing it always is. Your cost of borrowing will go up. Why? Because whoever is forced to pay for taking over this bank or Credit Suisse that's being taken over by UBS, they want to get their money back. The way they get their money back is by raising rates, charging more fees, masking their rates or their income in fancy words. So you're going to pay more. You're going to pay more for a car loan. You're going to pay more for a mortgage. You're going to pay more for a student loan. You're going to pay more for any credit cards. You're going to pay more. That's it, Mr. and Mrs. Consumer. You're going to pay more because that bank was allowed to deviate from what good banking practices should be. So a couple of friends of ours write articles about, you should only do business with mid-sized local banks. And I don't necessarily buy into that. You want to do business with a bank that respects you, that can show you that they're part of your growth trajectory and that their balance sheet is properly conditioned to be there with you for the next 5, 10, 15, 20 years. Now, if you're not carrying cash balances, you have no leverage with a bank. If you're just a straight out borrower, you have no leverage with a bank. But if you're a kind of business owner or individual that has significant cash balances, you have leverage with a bank. You make them show you what you want to know. If you're not sure what that is, give me a call, 800-743-0410. Anytime, make them prove to you that they are worthy of your business. That's what you should be concerned about. So, am I personally worried about the financial world or the banking world falling apart? Really not. I think that the big guys, the JP Morgan, Bank of America, Wells Fargo, PNC Bank, these guys I think are relatively rock solid. Can there be a run on anything or anybody at any time? Sure there can be. Of course there can be. So here's how you deal with it. You make sure that your house is in perfect order, and whoever you're doing business with proves to you every day, every week, every month that they are worthy of your business. I hope we provided some value today. If you like what we talked about, please share it, subscribe, ring our bell, join us, contact us anytime. Hope we brought you some value today. Have a great day.